What's up, guys? Welcome back to DCA. So in this video, we're going to talk about this rally that we've seen in Ethereum, and we're going to look at what's going on, and we're going to talk about the sustainability of the rally. Can we believe that it's real, and is it very likely that we are going to head to new all-time highs? So right now we're trading at around 1,640 bucks. And we've had an absolutely huge move over the last just about a month for Ethereum. So we were down here all the way at a low of around $890. And that is a price that most people never really thought that we would ever get back to. Most people had no conception that it was even possible to get below $1,000. When we got down to those levels, I think that became a prime buying opportunity for Ethereum, right? And we've been talking about this now for months and months and months. We started talking about Ethereum and its potential to go down to first $1,800, all the way back in December. Because when you look at the historical price action of Ethereum and when you look at the sort of the behavior of cryptocurrency when you head into these bear markets, we were looking at things like the realized price and just sort of indicating to people that, it's very possible that we go down to some of these much lower levels. And, we used other things like the logarithmic regression curves that we've seen for Ethereum to indicate that the price that we can head to is probably much lower than you actually think it may be. So that's neither here nor there. We've gone down to those prices, and now we want to know what's coming from here. So, something interesting that we need to look at is this. So, one of the metrics that we're always looking at on this channel is the active addresses in the network, because this is historically, and I think this will continue to be true, this is highly correlated with the price action of an asset. And it just makes sense. If you have more people coming into a network, there's going to be more liquidity in the network, and therefore there's going to be better price action. And we've seen this time and time again. So, if you look back here, you have the highest number of active addresses on the Ethereum network in the first and second week of January. Clearly, that's the time that the price peaked out for Ethereum. And then as these active addresses are sort of leaving the network, we can just, if you remember back to 2018 into 2019, into the early parts of 2020, the price was trending down, right? So Ethereum at the time went below $100. And so what we saw was then in this cycle was sort of a very similar thing. The active addresses on the Ethereum network sort of topped out in May at the exact same time that the price action topped out at, and it sort of trailed off from there. We had that small recovery in November, but then since that time, we've really been in a major downtrend. Something then interesting has happened recently, and we've seen an uptrend start to form in the Ethereum active addresses. In fact, I was planning on making this video today. This was something I've been planning for about a week now. But when I came on this morning to sort of see what's going on, we actually saw the highest number of active addresses on the Ethereum network that we've ever seen just back here on the 26th. I think it sort of speaks to kind of what's going on the Ethereum network. I think there's a lot of hype around the merge that's coming up, supposed to be in September. And we're seeing the addresses and the interest in the network starting to pick up from there. So if you recall back to 2021, after we had that crash in May, Ethereum was kind of what led the rally with the London hard fork, the EIP 1559. That sort of led us out of that stage of the cycle, that bearish stage of the cycle, and it led us up to the new all-time highs in November. Okay. So the question then becomes, is that what we're seeing now? Okay. And I think there's some mixed evidence here. So I think that there are some things that are starting to line up in favor of Ethereum and the crypto market. So we're seeing hype forming around Ethereum right now. In addition to that, we have to remember the macro picture is kind of dominating the scene right now. It is what is determining whether the price action can go up or down. So we're kind of relying on the stock market. We're relying on what the Fed is doing, what the inflation rates do in the coming months. I think that's going to be important. But I think there's some potential anyway that we could kind of see some element of an alignment of the market with the Ethereum merge in September. So I think there's potential that if some things fall into place and we were to see a rally in the stock market, that could potentially be a setup for the crypto market to go on a big run. And if you guys watch this channel, I don't deal in Hopium very much here, but I'm just sort of laying out a picture for what would need to happen in order to see something like this turn into something extremely bullish for the crypto market. Because we've been down at these lower prices, and I mean this bear market has been going on for almost a year now. And if you discount just this run that we had at the end of 2021, if you go back all the way to May of 2021, really, we've been in essentially a macro downtrend in the crypto market ever since May. So this has been over a year now that the market has been trending down. And we did go to all-time high prices in October and November, but all of the indicators suggest that that was sort of a very anemic rally. We're getting our first kind of positive sign that we've seen, something that we can rally behind and believe in almost a year now. Okay, so now that I've given you the hopium, it's time to bring it back down to reality a little bit here, because another metric that we always have to look at, because I think that this is just as important, if not more important, is this idea of a price volume indicator. And so this metric identifies the probably a more accurate idea of the actual liquidity in the market. So what that means is we're looking at the number of an estimated value of the number of dollars traded on an asset. And what we see is that just like the network activity, the number of active addresses, this also tends to be very highly correlated to the price. So we see that anytime that this, the price volume indicator that we have here is reaching up to new all-time highs, like we saw back here in January of 18, like we saw here in January of 2021, and then May of 2021. Anytime that we see this is pushing towards new all-time highs, the price is also pushing towards new all-time highs. And anytime we see that this is in a downtrend, a macro downtrend, we also tend to see that the price is trending down or sideways. Okay. So you saw another small recovery back here in May of 19. And the reason that this matters is because the crypto market is all about liquidity. And it's the same reason that we see when the Fed is pursuing a quantitative tightening policy. We see that, ever since there's kind of been a lot of fear that that is the direction the Fed is going, we've seen the crypto market trending down, right? We've seen the markets trending down in the face of decreasing liquidity. So the crypto market loves liquidity. Risk assets love liquidity. We see that they do extraordinarily well in episodes of quantitative easing, and we see that they do extremely poorly in the face of quantitative tightening. And so this metric is basically capturing that for us. It's showing us how much liquidity is flowing in the crypto market, specifically in this case with regards to Ethereum. So in spite of all these active addresses that we've seen come into the network, what we're seeing is the fact that the price volume has still been extremely depressed. We haven't really seen a return to liquidity in the Ethereum market. In fact, if we just look at how far down we are right now, down about 90%. So that's a huge amount, especially when we're talking about the fact that we're seeing this uptrend in active addresses. So we've been trending upwards in terms of the people participating in the network, but we're not seeing a commensurate increase in the amount of dollars being traded on the Ethereum network. What that tells us is that, we have a mixed bag of evidence right now. We have potential for a market rally coming into Q4, into Q3 and Q4 of 2022. And we're seeing that there's a commensurate response in terms of the active addresses in the face of the merge in September. However, we're not yet seeing the liquidity arise. And we're going to need to see that, I suspect. That's not to say we can't have some very positive price action, because if you look back here in October and November, the liquidity in the market, even into November, it was down 60% from some of the higher levels of earlier in 2021. And so from that perspective, we can definitely see positive price action. This is something we're definitely going to have to watch. And while I'm interested in the active addresses, at the end of the day, I think in terms of sustainability, long-term sustainability, this is going to be perhaps the more important metric. So it will definitely be something to continue to watch going forward. So that's going to be it for this one, guys. Until next time, as usual, see you.